Good morning, everybody, and happy Tuesday. Today is September 26, 2023. Top story this morning is the government shutdown. Are we really talking about this stuff again? It looks like it, guys. I'm sad to say. Newsflash, Congress is still full of a-holes. I am shocked, I tell you, shocked. Well, the reason why we're talking about this topic that I really don't want to talk about is because Moody's is saying, hey, guys, this is not good for the U.S. government's credit rating. Now, Moody's, you may recall, is the last of the three big ratings agencies who has still not downgraded the U.S. credit rating. The other two have already done so. Now, Moody's is not outright threatening to downgrade the U.S. credit rating, but they are saying this isn't exactly good for it. And hey, guys, we reserve the right to mess with your credit rating if you keep doing this. Now, obviously, Congress does not have their act together. Obviously, the United States has a colossal spending problem. Obviously, we are a freight train about to barrel off a cliff of insolvency if something doesn't change. And yet, every time we even talk about reducing spending just a little tiny bit, I'm not even talking about balancing the budget. I'm just talking about, hey, maybe we reduce it by a hair on the pimpled butt of this elephant of debt. Nope. Can't even do that. Shut it all down. Shut it down. Debt ceiling, close all the national parks, put up the barriers. Oh my God, I can't believe we're talking about this. They want to throw grandma off the cliff. All these stupid emotional arguments that come out about how it's just greedy people. Nobody wants to do their fair share. And then, of course, the guys on the right who are claiming that they're on the side of fiscal responsibility, they get in power and they do exactly the same thing. Nobody ever does anything about it. And now here we are with $1 trillion of new debt this year just to cover the interest on the existing debt. Keep that in mind, guys. $1 trillion of new debt just to pay the interest on the existing debt. That says nothing about all the other new debt. So, Joe Brown over at Heresy Financial did an excellent video a few days ago about the end of a 50-year debt cycle. And he had a pretty powerful line in that video. He said, if you're one of the people who thinks government debt spending is not a problem, then chances are you're one of the people who is on the receiving end of that government debt spending. Because government debt and deficit spending is a wealth transfer. They're taking wealth from some people, either in the form of higher taxes later on or additional inflation later on in life. That's what debt spending is. Value is not created out of thin air. It's only taken. If you're one of the people who says the government debt doesn't matter, chances are you're one of the people who is the beneficiary of that wealth transfer, not one of the people who's having it taken from them. Convenient for you, and you're the one who's saying everybody else is greedy. I'm not saying we shouldn't take care of the less fortunate. I'm not saying we shouldn't have a social safety net. But guys, here we are, $33 trillion in debt. Here we are, interest rates skyrocketing. We have a colossal problem. The U.S. credit rating's already been downgraded twice by two other credit rating agencies. Let's just go ahead and ignore the problem for another few months. Throw a few more trillion on the fire. What's the worst thing that could happen? Everything's fine. Elsewhere, we had Evergrande's CFO was arrested yesterday, a former CFO of Evergrande. By the way, I would add a prior headline to this video mentioned that the Evergrande CEO was arrested. That was incorrect. I have since revised it. I apologize for that error. The Evergrande former CEO is under a probe, but he has not been detained. Apparently, the CFO is the only one that's actually been detained, but both executives are under probe, whatever under probe means in China. There's a probe up there. See that? That's my probe. But what happened? My guess is this has to do with the fact that Evergrande just missed a $500 million onshore bond payment. Now, if you have been following the Evergrande saga, you know the difference between onshore and offshore when it comes to those bonds is huge, especially in mainland China. When they talk about offshore bonds, those are bonds to investors overseas, money borrowed from, say, Americans or Europeans or someone from other countries, and they're usually denominated in other currencies like US dollars. Now, foreign investors have been screwed since day one in this China Evergrande crisis. They were never going to get paid back. But the onshore bonds, the repayment of Chinese citizens, has always been a big priority for Evergrande, because when you miss those payments, now you've got the CCP coming down on you, because now it's a threat to public stability. In a communist country, public stability, that is a very big deal, because they rule through absolute power, and anything that pisses people off means the government may have to use their absolute power to maintain order. And that's how you end up with very unfortunate events happening in that country. And so Evergrande missed an onshore bond payment recently. It's a big one. That's Chinese citizens not getting their money back. And the Chinese government is saying, look over here, guys. We have arrested people. We are investigating people. These executives are not getting away with robbing you. This is different than, say, what happened with Alibaba a few years ago when Jack Ma just mysteriously disappeared. Nobody knew what happened. Oh, haven't seen him. No, I'm sure he's fine. And then he appears a few months later. That's not what's going on here. In this case, this is China's state media is saying, look, we arrested the CFO. We're doing something. This is a dog and pony show to appease public anger. And with that, let's shrink my big melon of a head and let's see what's going on in markets. And guys, while we're shrinking my melon of a head, take a moment, please, if you will, to hit that like button for the YouTube algorithm. And if you're new here, won't you please subscribe? We do this every business morning. Start your day with a cup of coffee and melon head. And here we go. The fear greed index once again in fear territory at 34 and dropping. That spike in interest rates following the Fed's decision last week not to raise rates, but the hawkish rhetoric from Jay Powell in the press conference afterward, notably when he took the soft landing off the table as the base case, well, that has got this market fearful, and interest rates have been rising ever since. Right now, we got the S&P 500 is set to open 27 points lower. That's 0.63% to the downside ahead of the opening bell. The Dow is down 191 points this morning before the open. That is near the lows of the morning, down about 0.56%. And the NASDAQ leading the way lower, down 97 points pre-market, or 0.66%, just off the lows of the morning, but still currently heading down. So stocks, once again, looking like a pretty bad day. It did all right yesterday, had a little bit of a bounce. Starting to look like that was just a dead cat, though. And check out the DXY. Now, the DXY is lower right now, but look at the value here, 105.89, down 11 basis points, so a little bit of a weaker dollar this morning. But look at what happened last night, guys. We were up over 106. We went to 106.20 last night. The dollar is surging here. I don't know what happened around 3:15 a.m. Eastern time last night. I don't know if some other central bank may have stepped in to defend their currency last night. But at 105.89, the dollar continues this move upward, threatening to break into 106 and stay there here. Wouldn't worry too much about this pullback, especially not after the run that it's had for the last couple of days. Looking over at the bond market right now, we have got the U.S. 30-year is down 3 basis points, a little bit of a break for bonds today, 4.627 on the 30-year. The 10-year is down 4 basis points, but still at 4.50, 4.5 for the 10-year. 2-year Treasury is down about a half a point, 5.127 on the 2-year, and the 1 month still pegged 5.392, essentially flat for the day. Looking over at commodities, we've got gold is down despite the weaker dollar and the lower rates. December gold futures trading at $19.26. That's down $10 this morning, or about a 0.5%. December silver futures trading at $23.19, down about 19 cents this morning, negative 0.83% for those December silver future contracts. And crude oil, check out crude, down a little bit this morning, not a lot, 15 cents, 0.2%, but 89.50 back into that 8 handle, under $90. I am looking for a possible entry point for an oil trade somewhere in the low 80s. I don't know if I'm going to get that entry point, but I am holding out for that one. And let's talk about this one here. This is the top story. U.S. risks its top credit rating with shutdown. Moody's warns. Moody's says the shutdown would reflect governance weakness. You think? Rating firm keeps the U.S. credit grade, but the outlook is unchanged. So this is interesting. They didn't downgrade. They didn't even change the outlook. They just said, hey, guys, the government shutdown. Really? If you do this again, we might have to change the outlook, or we might have to change the grade. Moody's Investor Service, the only remaining major credit grader to assign the U.S. a top rating, has signaled that its confidence is wavering ahead of a potential government shutdown. While debt service payments would not be impacted by a short-lived government shutdown, I'm sorry, let me start this over. I messed it up. The beginning is important here, okay? Debt service payments would not be impacted. I want you guys to remember that. If you're a U.S. Treasury holder, the government shutdown will not affect you. And a short-lived shutdown would be unlikely to disrupt the economy. It would underscore the weakness of U.S. institutional and governance strength relative to other AAA-rated sovereigns. Analysts led by William Forster wrote that in a report on Monday. The analysts stopped short of threatening a downgrade. That's important. Stopped short of an outright threat, but used unusually blunt language to express their concerns over the trajectory of congressional negotiations to pass a short-term spending bill required to stop a government shutdown when the new U.S. fiscal year begins in October. Guys, we have a spending problem. Everybody knows it. Just cut spending. Come on. Cut spending. All this stupid crap this government blows money on. You can't find a few tens of billions of dollars. Really, guys? Really? $2.2 trillion in new deficit spending this year, and you can't cut a few billion. Give me a break. This is our elected officials, guys. We got John Fetterman in his hoodie and his gym shorts. We got Glitch McConnell, who just seizes up in the middle of a press conference and has to be walked away. So Control-Alt-Delete. Got to reboot the Senate minority leader so he can speak. Dianne Feinstein, who's wheeled in there, and the aides are whispering in her ear, just say yes, just vote yes. Just vote yes. Who's controlling these people? These are the people who are running Congress. No, I don't know why Moody's is thinking about a downgrade of our credit rating. I'm just shocked to learn about this. A government shutdown would demonstrate the significant constraints that intensifying political polarization continues to put on U.S. fiscal policymaking during a period of declining fiscal strength, driven by persistent fiscal deficits and deteriorating debt affordability. I'm saying Congress can't get their act together. Congress can't stop spending money. They keep running up debt. And the Federal Reserve is making that debt more expensive. And this is a bad combination. I'm not saying anything new here. And yet we're still having this conversation. We're still acting like we don't have a spending problem. It is just amazing. Moving on with all available speed from this topic. Exclusive. Former Evergrande CEO and CFO face probe, sources say. You got to love when Cakes and Global says exclusive because they're basically just government state media in China. Of course, it's an exclusive. You're government spokespeople. Anyways, this one just came out yesterday. Multiple current and former executives of China Evergrande Group and its subsidiaries have been swept up by investigations as authorities look into whether the embattled conglomerate has violated rules over how funds can be used, sources with knowledge of the matter told Cakeson. Pan Darong, a previous CFO of the group, has recently been detained by Chinese mainland authorities who also imposed restrictions on ex-CEO, I'm going to get my pronunciation wrong here, ex-CEO Jia Haijun. How did I do, guys? After he returned to the mainland around mid-22, according to sources. So again, I just want to mention a previous version of the headline had mentioned that the CEO had been arrested. That was incorrect. The CEO is under a probe and he has had restrictions placed on his movement, but they didn't actually say he's been detained. However, the former CFO has been detained. So they are looking into the executives. They arrested one. They're putting restrictions on the other. Why are they doing that? My guess is it has to do with the timing of this story. China Evergrande misses payments on $547 million onshore bond. And it's that onshore is the operative word there. That's money owed to Chinese citizens. Mainland unit skips principal and interest payments on the bond, and the move comes after the developer canceled creditor meetings. We talked about this yesterday. Evergrande is headed towards insolvency here, guys. The mainland unit of China Evergrande Group said it missed principal and interest payments totaling several billion yuan, adding further uncertainty to the fate of the giant developer at the center of the country's property crisis. Hengda Real Estate Group, that's a Evergrande subsidiary, failed to repay a $547 million loan in principal and interest due September 25th, the company said in a Shenzhen Stock Exchange filing on Monday. China Evergrande canceled key creditor meetings that had been set for this week and said it must reassess its proposed restructuring. The company faces an October 30th hearing at a Hong Kong court on a winding up petition, which could potentially force it into liquidation. That liquidation, guys, would be a really bad thing for the Chinese housing market. If all of those Evergrande assets go up for sale at the same time, you are going to see prices crash like we have not seen so far in this crisis at all. Keep an eye on that one. What did they say the deadline was? October 30th. It's just a little over a month away. Also, we got some more stories going on today. Ford pauses work on their $3.5 billion battery plant in Michigan that you are paying for. Check this one out, just dated yesterday. Ford said on Monday it had paused work on a $3.5 billion electric vehicle battery plant in Michigan, citing concerns about its ability to competitively operate the plant at a time when it remains locked in broader contract negotiations. So they're saying, hey, the UAW wants so much money in this contract dispute and the strike. Gee, it'd be a shame if we had to stop the planned work on this $3.5 billion factory. And it is amazing. I have been talking so much about how the EV thing, guys, it doesn't work. The power grid can't support it. We don't have enough rare earth metals. The range sucks. They take too long to charge. The fires are undousable. I don't know if that's even a word. Somebody look it up for me. EVs are just stupid, okay? Yeah, I get it. They're great for the planet as long as we pretend that electricity comes from the wall and not from power plants that also emit carbon and other pollutants. Even with the government passing this Inflation Reduction Act and basically giving Ford a free battery factory at no cost to themselves, Ford is still saying we may not be able to operate that factory. Why? Because EVs are a garbage business model that can't stand on their own. So why, as we're talking about Moody's downgrading the credit and shutting down the government, why are we talking about taxpayers funding the construction of this big battery factory? This story, they just, all right, I'm getting a little overheated. Let me give you the quote from the CEO here. We are pausing work and limiting spending on construction on the Marshall project until we're confident about our ability to competitively operate the plant. Competitively operate this plant that somebody else is paying to build for us. Okay. That's what Ford said on Monday, declining to say what specific reason triggered the decision, but adding there were a number of considerations. We haven't made any final decision about the planned investment there. Ford maybe hasn't made the final decision, but the U.S. taxpayer has, because under the Inflation Reduction Act, we have already given them the money to do this. Don't you just love all of this government spending? Elsewhere, speaking of inept and incompetent government officials, the SEC collects Wall Street's private messages as WhatsApp probe escalates. This story was interesting. It sounded like a big deal until I got to the wording of it. The U.S. securities regulator has collected thousands of staff messages from more than a dozen major investment companies, escalating its probe into Wall Street's use of private messaging apps, said 4 people with direct knowledge of the matter. Previously, the SEC had asked companies to internally review the messages in its investigation of Wall Street's use of WhatsApp and Signal and other unimproved messaging apps. So a lot of these traders at these firms, they're all subject to FOIA requests and subject to subpoenas. So what a lot of these guys are doing is they're handling their messages and their work communications through encrypted apps like WhatsApp and Signal so that the SEC can never go back and see what they're doing. They're potentially hiding illicit activities from regulators using these apps. Now, here's where this gets hilarious is when we talk about some of the other ways that they've done this. First of all, the groups that are involved. The firms included Carlyle Group, Apollo Management, KKR, TPG, and Blackstone. These are some of the biggest managers, money managers in the business. That's according to 3 people with direct knowledge of the matter, as well as some hedge funds, including Citadel, who said, and a different person with direct knowledge, the executives gave their personal phones and other devices to their employers or lawyers to be copied, and messages discussing business have been handed to the SEC. That is, of course, assuming the lawyers who are copying the message don't delete anything that is unflattering or unfavorable to the organization first, and then hand them off to the SEC. The SEC isn't just taking the phones. The company lawyers are copying them and then handing them to the SEC. I'm sure there's nothing nefarious going on there. But look at this last paragraph. I just love this one. This is in contrast to the broker-dealer probes, the previous probes. In those cases, the SEC asked companies to review staff messages and then report to the agency how many discussed work. So the SEC asked the companies to investigate themselves, find no wrongdoing, of course, and then report to the SEC what they found. This is our securities regulators, guys. These are the people who are in charge of policing Wall Street. Hey, we want to make sure you guys aren't breaking the law, so investigate yourselves. Let me know what you find, okay? All right, good talk. Keep up the good work, SEC. Gary Gensler, you're doing fantastic over there. No sarcasm. The SEC reviewed only a sample of the messages themselves, according to 3 sources with knowledge on the previous investigations. You just got to love your government officials, guys. Check this one out from EJ Antoni on Twitter this morning. Actually, my moderator, Mish, found this one. I think this was put out yesterday. Commercial real estate is occupying an increasingly large portion of regional banks' balance sheets. These banks already can't repay the Fed's emergency loans, like the Bank Term Funding Program, the discount window borrowing. So what are they going to do when 30% of their portfolios become toxic? Now, what you're looking at in this chart, guys, this is commercial real estate loans as a percentage of all assets on the bank's balance sheets. Now, the blue line down here, this is America's big banks, the big domestically chartered banks. Commercial real estate loans only make up, it looks like 6 or 7% of the balance sheets at the big banks here shown in blue. But look up top here. This is America's small banks, where commercial real estate loans makes up, as of the most recent data, almost 30% of the balance sheet. 30% of all assets on the balance sheets of America's small banks are commercial real estate loans. That's amazing, guys, because keep in mind, that doesn't just mean these stocks might go down 30%. All right. The bank's balance sheets, a bank cannot absorb more than a couple of a percent hit to their assets on their balance sheets without wiping out the entire capital of the bank and driving them insolvent. So the fact that 30% of all assets on the balance sheets of America's small banks is made up of commercial real estate loans, wow. This is a ticking time bomb in the financial system, in the banking system. And I mention this, guys, because our banks start reporting their earnings in a couple of weeks here. I don't know if this is going to be the round where it finally happens, but if we get trouble in our banking system, it's not going to be from JP Morgan. It's not going to be from Bank of America. It's going to be from John Jane Q Bank of small town America. And it's going to be happening over and over and over again. That will be the crisis caused by commercial real estate, not some big bank going down, lots of little banks. And the banks start reporting their earnings mid-October. So keep an eye on this one and keep an eye on those small banks. That's where the problems will show first. 30% of all assets on small banks' balance sheets are commercial real estate loans. Last one of the day, United Natural Foods stock tumbles on weak guidance and a quarterly loss. Why does Jack care about an organic food distributor? You might be asking. Well, there's something in here that's important that I want to get to. Shares of United Natural Foods, ticker UNFI, were sinking on Tuesday after the company pivoted to a loss in its 4th fiscal quarter and issued disappointing guidance. Now, that's not the story. It's this quote from the CEO that is important. While we grew sales across all of our customer channels, profitability declined primarily due to decrease in inflation-driven procurement gains and elevated shrink. Now, it's those things. First of all, partially due to a decrease in inflation-driven procurement gains. I interpret that to say we no longer have pricing power. We can't pass the rising cost of inflation onto the customer anymore because the customer won't buy the stuff. So they're saying here our profitability declined because we've reached that peak. We can't raise prices anymore, even though our costs are still going up. So that's important. That means the solution to high prices is high prices. But the other thing they're talking about profitability declining is elevated shrink. Guys, that is soft, gentle speak for people are stealing our stuff. We're talking about a food company here. So we have now gone full Demolition Man, right? The Taco Bell scene at Demolition Man when they're stealing all the food from the truck. When theft of food is happening on a high enough scale that it results in a massive decline in the earnings of publicly traded companies, then society has a big problem, guys. We're not talking about a couple of guys. We're not talking about a few smash and grab jobs or one guy stealing a TV. We're talking about elevated shrink at food stores. People are stealing food. We have got a big problem. Inflation has created a huge disconnect in this country. And turn on CNBC and turn on Forbes, and all you're going to hear is them talking about how AI is going to usher in this new utopian society, Edgar Friendly, John Spartan. You're fined 1 credit for violation of the verbal code. Meanwhile, people are stealing to eat. This is a big problem. And right now, if you're a UNFI shareholder, you are down almost 20% this morning on that news. That is a big deal, guys. All right, I got a couple of thank yous I got to send this morning. First of all, thank you, Clarence. I appreciate that. What's your clearance, Clarence? I love that line from what movie? Let me know down in the comments. Clarence is saying, got to commend you for recommending the book, The Great Taking. Best food for thought. Keep up great work. Guys, The Great Taking by David Rogers Webb. Thank you, Clarence, very much for the support of the channel, by the way, and I echo your sentiment. I can't take credit for the book. My dad sent me several text messages during one of my live streams the other day, and he says, you have to talk about The Great Taking. You have to talk about The Great Taking. And I spent last week, I can't remember which day it was, but I spent the day reading that book. You can do it in one sitting. It's about 130 pages. It's a free PDF book. You can get it online. Google The Great Taking, David Rogers Webb. You'll go right to it. Eye-opening stuff, guys. You think you own stock. You don't. You own a securities entitlement. And if the company that you bought the stock through goes bankrupt, guess who gets your stock? JP Morgan or the bank that's underwriting them, not you. And this is true across the board. And that is the premise of The Great Taking, that they have placed the laws in place to basically seize everything, leaving you with no assets, but all of your debt. That's the premise of The Great Taking. My dad recommended that. Thanks, Dad. I appreciate that. And he heard about it first from Mario Ineko over at Monaco 64, who was the first guest I ever had on this channel. Shout out to Mario. Go check out Monaco 64. Fantastic channel. And thank you very much, Clarence. I appreciate the feedback. It was a really good read. Scary stuff in The Great Taking. Highly recommend you guys check that one out. And it is free. And thank you, Steve Woitis, for the super chat. He says, with a PhD in economics, Dr. Copper is flirting with a 9-month low. You will not find a better barometer of the economy, of economic health, than copper prices. Absolutely, Steve. Copper is used in everything. It's used in homes, copper pipe, copper wiring. It's used in electronics. It's everywhere. And, you know, even though we have major supply deficit problems with copper in this world because we have underinvested in mines for years now because of environmental and ESG and low prices, copper prices are still in the dirt. Why? Because the biggest builder in the world, China, doesn't need copper anymore because they spent the last 20 years building cities nobody needs. And so about 50% of global copper demand, buildings nobody needs to live in, that's about to go away. Something I've been talking about since about 2021 on this channel. The collapse of the China housing market is going to affect copper. It's going to affect all the base metal commodities big time. And you're right, flirting with a 9-month low, that is directly attributable, in my opinion, to the decline of the Chinese housing market. Thank you, Steve Woitis, for the super chat, the support of the channel. And thank you, Attic Renewal. I appreciate that very much. He says, thank you for your atomic analysis on the EV experiment. See you in Las Vegas. Viva Las Vegas, Attic Renewal. Come on up and say hi when you see me there. Don't be shy. I'm looking forward to Vegas at the Silver Symposium at beautiful Caesar's Palace. You're going to find a link to that. You can still get your tickets, guys, just a few days away. You'll find a link down below. If you use that affiliate link, you'll get 10% off your tickets. Thanks again, Attic Renewal, for the super chat and the support of the channel. Thank you, everybody, for your time this morning, for spending your coffee time with us. Thank you to my Patreon supporters for everything you guys do for the channel. Another link down below, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.